Oh, good day, everybody. You are welcome to another section of our training. All right, today I'll be teaching you about the market structure, right? So, there are some things you should actually know. There are some basic things that, okay, because we are now trading institutional style of trading, or you're even a retail trader, right? Everyone is actually a trader. As long as you are not actually major banks, right? You are still a retail trader, right? So, but there are some basic concepts in forex that, or in any financial market trading style, that should not be taken away. These are actually very, very important, right? They are very, very important, and they are very good to for us to to um to do well in the financial markets. Joining this with the knowledge of the institutional style of trading, we actually enhance your trading style so much more, right? And this is actually what will bring us to the concept of the market structure, right? Market structure, right? So, what is market structure? What are the characteristics of market structure, and what are the things that we actually going to see in the market, right? We will be talking about the market structure, right? So there are differences. I mean, there are different type of characteristics of market structure. I mean, let me put it this way: there are different characteristics that you can actually see in the market, right? There are different characteristics of the market structure. So I don't know. You might have actually heard about what is called a trending market. So the first one, we're going to look at a trending market, or a trending market, right? A trending market, right? Then we also have what we call a ranging market, right? A ranging, right? A trending market or a ranging market, right? A trending market is can also be called an impulsive move, right? There, whereby where the market is actually making some impulsive move, right? So that is actually what we can call a trending market. That's just the market is actually trending. The market is actually moving in an trending manner, right? So the market is moving in an trending manner. Then the second characteristics or the features of the market structure is what we call a ranging market, right? Or when the market is actually consolidating, right? When the market is actually consolidating, or we can say when the market is accumulating. So ranging market can also be called accumulation, right? Accumulation stage, right? It can also be called consolidation stage, or the consolidation phase of the market, or it can also be called the ranging market. So these are the different names you can actually call the ranging market. You can call it consolidation, you can call it accumulation phase or the accumulation stage, and you can also call it a ranging market, right? Or right, some people will actually call it or a contraction moment of the market, when the market is actually contracting, right? That's they're actually getting contract from people. I mean, contracts of lot sizes. They're actually getting a lot of people to actually enter their positions before they will now break through out in that market. So, and the first one that I mentioned, I said we have a trending market. A trending market can also be called an expansion. It can be called a distribution, right? Or it can also be called an impulsive move. So a trending market have different names. So the first one among the trending market that we have is uh, you can call it um, an impulsive, right? Impulsive move, right? You can also call it, right, an expansion, right? An expansion, right? Or you can call it um, a distribution. That shows when the market is actually distributing, right? This is uh, uh, the market situation of the trending market. Then the next one, which is actually the ranging market, is actually a moment whereby the market is actually contracting, right? A contraction moment, right? Right. Then you can also call it it is actually a ranging market. You can call it an accumulation uh, stage of the market, right? Accumulation stage of the market. So these are actually the names. So you can call it a trending market, and you can call it a ranging market, right? So let me just show you different example before we actually check these things on the chart, right? Or in a trending market, right? That's actually what we call an impulsive, an expansion, or a distribution. That shows market is just going higher, right? Market is just going higher, right? Then the ranging market is actually when market actually pause a little bit. That's actually the pause in the market whereby there is no movement at all. It can actually just the ranging market can just be ranging within just one spot, and before you know it, market break out again and continue that impulsive move, right? So we can call this phase, right, an expansion or a distribution or an impulsive move. Then we can call this phase a ranging market or a contraction or a contracting market or accumulation phase of the market, right? So these are the two characteristics of the market structures, that the characteristics is what can actually find. Then another thing we can also look at is, okay, what are the situation that the market is actually giving to us, right? So in there are, okay, let me put it this way: in a trending market, just like I've actually talked about the trending market, right? We have what we call um, a downward movement, right? A downward, well, let me first use an upward movement, right? Which we can also call a bullish market, right? That's when the market is bullish. Then we also have the second one, right? We have, and the second one, we have a downward movement, which we can also call bearish. Downward, right? Right. Which we can also call bearish, right? So these are the things that we actually see in the market, but in the ranging market, we can see the iota of these two in a ranging market. But what's actually of most important for us to actually understand the market structure, in which I'm going to show you different examples in a bullish market. Actually, the first one I actually highlighted here. In a bullish market, the market is making a series of higher high and higher low, right? The market is making a series of higher high, right? I can actually name that as HH, and higher low. That's actually in a bullish market. In a bullish market, the market is making a series of higher high and higher lows, right? But in a downward movement, the market is making a series of lower low and a lower high. So when the market is making a series of lower low and a lower high, then we can call that market a bearish market, right? But when the market is making a series of higher high and higher low, we can call that market a bullish market, right? A bullish market. So these are the different types of the bullish market and a bearish market. We can have it in higher highs and higher low, which is actually a bullish market. Then we can also have a lower low and a lower high, right? So I'm actually going to be showing you different examples of what I have explained in a chart now, right? Just like what I said, we have two characteristics of the market structure. The first one, we have a trending market, and I said the trending market can also be called an impulsive move, an expansion, or a distribution. Then the second one, I said we have a ranging market, right? A ranging. So this is actually when the market is contracting, when the market is accumulating, or when the market is consolidating. That's actually the one I actually left out, right? Consolidating, right? The consolidation phase of the market. So this is when the market is consolidating. So these are the types or the characteristics of the market structure that we have. Then I said in a bullish, in a trending market, we can have an upward movement, which is actually a bullish momentum market or bullish market, and we can also have a downward movement or a bearish market. So the major things we have in the market is actually a bullish market and a bearish market. So the fight, the market is always between the bullish, who's actually when the buyers are taking the upper position in the market. Then we have the bearish market when the sellers are actually taking the preeminence in the market. So in the bullish market, only the buyers always win, and in the bearish market, only the sellers always win. So that is why we should not actually trade, we should not sell when the market is actually buying. That shows we should not sell in a bullish market. And likewise, we must not buy in a bearish market. So when you understand this, it will actually prevent you of so many losses, right? Because you would not actually have the ability to buy in a bearish market, and you will not sell in a bullish market. So when you see the market making a series of higher high and higher low, you will know that the market is in a bullish market, right? The market is bullish. That shows you don't want to be a seller. Then when you see that the market is making a series of lower low and a lower high, then you don't want to be a buyer, right? You don't want to be a buyer. So we're going to see different examples of this, then we will move on. All right. So in a bullish momentum market, right? Let me clean my board. Right. In a bullish momentum market, the market is always going like this. We have an expansion or a distribution, or we have an expansion or a distribution, then or an impulsive move. Then the market will give us a drop, right? So when the market is actually moving in this manner, right, then we can say that the market is bullish. So I'm actually going to title that for you, right? We can say the market is bullish. Why? Because the market is making a series of, this is higher high, right? We have higher high, right? This is called the higher low. You will notice that this low must not actually take out this low, right? So I'm still going to explain that characteristics to you, because this is very important, that thing that you must know. So this is higher low. That shows this is the low of this high. Then we have another higher high, right? We have another higher high. Then we have another higher low, right? Are you following? Then we have another higher high, right? Then we can have another higher low, right? So the moment this low is broken or is taken out by another candle, and the candle actually closed below it, or a candle just spike through it, that is considered as a break in the market structure. Why? You know, the market is actually going higher. So when the higher low is taken out, then there is a break in market structure. That shows there is a breaker, or there is a last step broken, because this is a step, right? This is a step, right? This is a step. So instead of this step to actually go higher, if this step actually failed to go higher but actually come here to break this step, then we can actually say that there is a break in the market structure, right? So these are the things you must actually pay attention to. So in a bullish market, the market is making a series of higher high, higher low, higher high, higher low, higher high, right? But in a bearish market, the market is making a series of lower low, right? Lower high, right? The lower high must not be close to, must not be above this area. No. It must not. That shows that there's a break in market structure. We have another lower low, right? Then we have another lower high, right? We have another lower low. So when we see this kind of structure, then we can readily say that this market is in a bearish market, right? This market is in a bearish market. So we have an expansion or a distribution. The market went up again, right? We have another downward movement. The market will go up again. So this is actually called a lower low, right? This is called a lower low. This is called a lower high, right? This is actually the high of this low. And this is called the lower low. Why is this called a lower low? Because it's actually lower than this one. Then this is called a lower high, right? A lower high. Then this is also called a lower low, right? So just like what I explained there, anytime the market now came back up and broke this level, that shows this high is now higher than this high, then we consider this as a break in the market structure, because this high is higher than this. So this will not be a high, and this will actually going to be a higher high. Do you understand that? So this is actually going to be a high now, and this is actually going to be a high. So what we now be expecting is the market to come down a little bit, then before we can now continue a series of higher low, higher high, and in that way. So this is actually what we call market structure. Right, market structure. Okay, very quickly, let's go to the chart and see what we can actually identify as the market structure. Right. Let me just look for where we can. Okay, look. For example, look at this. Look at this. So we're going to focus on this. Then we're actually going to see what is happening there. All right. This is. Let me start from this. This is lower low. I mean, this is a lower high. Can you see my cursor here? This is a lower high, right? This is a lower high. Let me start from this so that you can actually see. This is a lower high. Can you see this? This is a lower high because this is actually another high. Then the market came back, actually created a low. The market actually gave us a high here. So with this, we have another lower low. This is a lower low here. Then unfortunately, this market actually came up and actually broke this high. So this area, which was actually a lower low before, I'm talking about this cycle that I drew here, now became a higher high or a high. Then this will now become the what? The higher high. Right, the higher high. Right? Then this will become what? The higher low. Right? The higher low. Right? When this area is broken, right? As long as this area is not broken, then we cannot actually call another thing a bearish market. When this area is broken, we look at that high again and call it a higher high. This is another higher high. Right? This is another higher high. Right? Then this is another higher low. Right? This area is another higher low. Higher low. Then we have this structure, this one broken again. Right? Broken again. Then we can actually call this higher high. Right? Higher high. Then when we have this low, as long as this lower low is not broken, so we have a lower low, right? I'm sorry, a higher low again, right? A higher low, a higher low. Then this high was taken out again, right? This high was taken out again. So this now become a higher high again. This become a higher low. Right, you can see this is a clear bullish momentum market. Now, this high is broken, then this became the higher high. Can you see that? This now became the higher high. And that is actually what we call the bullish market structure. That shows the market structure of this particular pair as at this time is actually a bullish market. So what I'm discussing is actually the higher time frame perspective, right? In the market structure, right? So this market is making a series of higher low, then we can actually call it a bullish momentum market. So let's look for a bearish one. Let's look for a bearish one. You know, when this high was created, then another high was actually created here. Can you see another high here? Right? Can you see this was actually broken, right? This high was broken. Then what happened? The market actually closed below this. I'm actually going to be showing you probably in subsequent time a dynamics in this market structure where you can actually determine your market being broken before this area. But for the purpose of this class, we're going to take this low. When this low is broken, we're going to take this as a break in the market structure, right? As this one in break in the market structure. Very, very important. This is actually a break in market structure now. Then when this low is not, we now locate the nearest low. So this is the nearest low. So this is actually a high, then this is a lower low, right? So this is actually going to be a lower low. I mean, this area is going to be a lower low. Then this area also, this area here is going to be a lower low. Then this area would be a lower high, right? A lower high. This area will be a lower low, right? A lower low. This area will be a lower high. Can you see that? A lower high. Then this is actually lower than this. So this is actually going to be called a lower low, a lower high, a lower low, right? Until the market now came up higher and actually broke the structure. Then we call this a higher high. Then the market dropped back again, then created a lower high here. Can you see? The market created a lower high here, then the market dropped again and actually gave us a lower low, lower high, lower low. So this is actually how this market continues until this structure was broken again. So this now become a higher high. This area, this structure was broken. That now makes this area the higher high. Then this now the higher low, right? Higher high, higher low. Then the next one we have now have a lower low, the lower high, lower low, lower high, lower low, right? Lower, lower, lower high, lower low, lower high, lower low. Then the market was actually broken. So this actually gave us a higher high, higher low, higher high, higher low. Can you see that? Higher high, higher low. Then the market created a lower high. So when the market created a lower high, then we have a lower low here. Can you see this? Even though it's actually created another lower low here. So give us another, a lower high here. So this is actually the lower low. So when you see this kind of market, you just know, okay, this market is bearish, right? So this is a lower low here. This is a lower high here, right? Then the market is giving us another low in here. So that is actually what we call the market structure, right? The market structure and that's actually for an impulsive move. Now, what do we call contraction or a ranging market or consolidation, right? Just like you would have actually heard something about that price is fractal, right? Price is actually fractal. That shows what you see in higher time frame. You can also see the same thing in a lower time frame, right? What you see in higher time frame, you can see the same thing in a lower time frame. So this is actually going to be the most important thing that we're going to talk about now. So you need to pay attention and actually listen to how I'm going to explain this concept. So you listen to it on how I'm going to explain this concept. Now you can see that this is a daily time frame, right? Okay, we want to trade, and you can also apply this. What I actually want to explain now, you can apply it in higher time frame. Probably if you're a busy type, you always go to work and come back in the evening, and you cannot actually trade the lower time frame. Just as I always trade lower time frame, I trade 1 minute time frame. I trade 8.5. I trade M5 and the likes, lower time frame, just for me to enter. But because of your own busy schedule, you cannot do that. This particular structure that I want to discuss with you now is actually very, very important, right? It is very, very, very important. Okay, let's go back to the bullish market that we actually used as an example the other time. Now, look at this. This is a lower high. Can you see this lower high? Right. Let's just take this as a lower high. This is a lower high. Then this is a lower low. Right. So when this structure is broken, this particular area here, right? When it is broken, so we tag this place, right? We're going to tag this place as a higher high, right? Sorry, let me change the color. So we are going to tag this place as the higher high. Can you see this? Then when the market actually came to this area, we're going to tag this place as the as the higher low. So now, how do you now buy this market? As long as this market has actually given you, I'm talking about market structure now. As long as this market has broken the lower high here, right? This market has broken your lower high, then created the higher high. Now you are now anticipating what a lower high. You know, in a bullish market, you know in your mind, when market break a higher low, a lower high, when markets break a lower high, then you should know that, okay, the new breaker, which is actually the new the new high that is now created is actually going to tag as higher high, right? Now, when you now enter this market, right, just for you to continue the new trend that was now just created, because a new trend has just been created by a market breaking this particular lower high, right? By market breaking this particular lower high, then you should know that okay, the market wants to change to a bullish market now, because the market has now created a higher high. So you are now looking for a lower high. You are not looking for a higher low. You know, you are in a bullish market now. You are now looking for a higher low. All right, in looking for your higher low, then from that higher low, that is where you are going to take your trade and actually enter into the market. So this will now be the second part of this particular modules, whereby we talk about the views in lower time frame, right? Views in lower time frame, right? Views in lower time frame. Now, before you now take this trade, cannot take this trade, you are going to go down to a lower time frame lower than this, which is actually H4 and H1, right? 2 time frame lower than this, H4 and H1. Then you will see, let's mark this area, that this market, can you see this area now? Okay, now let's go back to, I will choose H1. Where is this zone? I would choose H1. Right. Look at this zone here. So let's go through it from H1. Right. On H1, we are looking for that zone that we just marked. Before we can look for this market, we're not just going to buy it immediately. We'll look for the place where the market is actually going to give us another higher high for us to look for that market. Just a minute. Let me check the date that this happened. Okay. Let me go to H4. Let's use H4 then. Right. You can see we've already cited that, okay, the market, this is actually on a daily time frame, has already broken this high here. This actually, we are using daily. This high was broken. Can you see this high that was broken? Then for you to now decide, this was now the new high that was created, right? For you to now decide to buy this pair, after this market has actually dropped to create a lower high, this actually, a higher low in the daily bullish market, right? This is actually a higher low. Before you can now look to buy this market, you will this is actually a lower low, another lower low. Then in the H4 market, right, in the H4 time frame, you will wait for another break in the market structure there before you can now buy this pair, right? So that's actually going to be a sign that this will continue buying in the higher time frame, because the higher time frame will just establish that, okay, this market has changed to a buy. So for us to now take that trade, or for us to now determine that trade from a lower time frame, this is actually the views of higher time frame in a lower time frame. Okay, let me explain this way before I continue further. You will know that the market is fractal, right? When the market creates a lower high, created a lower low, then we have the market broke this area. Now the market will come back a little bit for a higher low, then the market will create another higher high. The market will come up a little bit for a higher low, then the market will create an higher high. Right. In between all these impulsive move, we have some other patterns of higher low, higher high that is actually taking place there. Right. So in this place, we are going to have higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Can you see that? Then in this area, we're going to have what? A lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. Then this market will continue like this: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then in this particular area, it's going to create a lower high, a lower low, a lower high, a lower low, a lower high. So when the market is creating that in the lower time frame here, when we now see a break in the market structure, just like what we have here, this is the lower low, right? This area here is a lower low. This is another lower low. Then this is a lower high. Can you see this area? So when this market now came back, to actually break this area here, then we can now say that, okay, the market has now created a new high in the lower time frame. So that will now confirm to us that, okay, this market wants to buy. Are you following? So that is actually the view of higher time frame in a lower time frame, right? The view of higher time frame in a lower time frame. Are you following? So very, very important thing that you must actually note that in a lower time frame, when the market is actually creating a higher low in the market, in higher time frame, when the market is creating a higher low in the market, then you should know that the market in lower time frame is also creating a series of lower low, a lower high, lower low, lower high, lower low, lower high. So when the market is broken, when the market structure is broken on lower time frame, then you can now look to enter to continue the trend in higher time frame, provided that trend is now okay. Now, in this particular way, now you know where are you going to put your take profit is actually this high here. Sorry, is this high here. That's actually going to be your target, right? You know, you've actually entered the market in this area. When the market actually broke that, then your target is actually going to be this area, right? When we finish, by the time we actually finish this course, we're actually going to know how to put all this picture together, right? Very, very important. We are going to know how to join all the whole picture together for you to understand very well. Now, what the essence of what we are discussing is that in a bullish market, the market is creating higher high, higher low, higher high, higher low, right? Higher high, higher low, higher high, right? Then I said in between this higher high, higher low, right? In between this market, the market in the lower time frame, let's assume that this is actually daily or weekly or whatever higher time frame you've actually seen. Then in two lower time frame lower than this, the market will be creating a series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then downward movement, lower high, lower low, lower high, lower low, lower high, lower low. Right? This one also higher high, higher low, higher high, higher low, higher low, higher high, higher low. Then this lower high, lower low, lower high, lower low, lower. The same thing continues like that. So for you to now catch this pair, you actually want to see a break in the market structure in the lower time frame. For you to now take that trade, then your target is actually going to be this high. Right? We are not talking about this strategy now. I'm just talking about how market structure works and how you can actually deal with that market structure using our method is actually going to be discussed later on. Right. So I need you to actually understand all these principles first. Now let's look at the bearish market now. The examples in the bearish market, I've actually show you the for the daily, then the H4. Let's look at for the bearish when the market is creating a series of lower high, right? I mean lower low, we have lower high, we have lower low, we have lower high, we have lower low, we have lower high, we have lower low, right? So if this is an higher time frame, then you know you're actually looking for when the market is actually going to get reversed. Then in this particular area, you switch to lower time frame for you to discover where there is a break in the market structure in here, right? When you have actually located the break in market structure, then your target is actually going to be this area. When the market created the lower high again, look for break in market structure that will actually determine a bearish momentum. Then you're actually going to target this area. Then in this area also, you will target this area. And that's actually how you will continue. So merging this with our strategy, we're actually going to bring so much values to you. So you need to understand this. Now, let's look at a chart example of what I'm talking about. Okay. I hope you're actually understanding this and actually getting what I'm trying to explain to you. Right. So let me go back to the daily and let me look for a bearish market for us to discuss this. Now, look at, let me use this example so that I can actually use each one. The first one I used was actually too far, so I could not actually go back to that date again. Now, look at this area. This is actually a higher high, right? Then the market came back to give us a lower low. Can you see this? Right? Can you see this? Then when you notice this and when the market is now creating a lower high, you should actually be ready to sell this market, right? You should be ready to sell this market because this structure has already got is already broken. So you should be ready to sell this market. So when will you sell this market now? You are expecting, you know, your lower low is actually this area. So this is actually going to form your your expectations, which is actually going to be your take profit area, right? Now, you will not drop down to a lower time frame, let's say H1, to see when the market is actually broken. Sorry, using GBP USD. Right. So to see where the market is broken. Right. So let me go to H1. Now, look at this area. Can you see the market? You know, in a daily time frame, this market is actually bearish, but in 1 hour is bullish. Can you see this? But you don't want to be a buyer, or else you actually counter trading, right? You actually want to take a counter trend, and you can actually buy this pair. But this pair is actually bearish, so you should actually know that. Now, in a bullish market, the market is now creating a series of, can you see, higher high, higher low, higher high, higher low, higher high, right, right, higher high. Then this market give us a breaker here, right? It actually broke market structure in here, created a lower high, then broke this, but it also failed. But you still know that on higher time frame, this market is still bearish. So your confidence is still telling you that, okay, this market is still bearish. Then this impulsive move actually happened. Then what then do we have? We have a lower high here. Then the market broke this lower high. So this is now where you want to be a seller. Now, when you actually want to be a seller is when this market got broken. I'm going to discuss all this entry later on. So, you know, you already have a breaker in here. That shows you should be looking to sell this pair from this area, right? From this area. Then your target is actually going to be the last low that we actually have on daily, which is actually this zone that we actually marked. Now, look at it on daily. This actually was a zone we marked on daily as a lower low. So when you now have a breaker on H1, which actually shows you a bearish market also on H1, then you should know that your H1 is now in line with your daily. So this is now the best kind of trade you can trade. So from this area to this area will now be what you're actually targeting. Then you actually wait for another lower low to be created. So this was the lower low that was created. Then you find another lower high. This is another lower high that you can actually find, right? This is another lower high. Can you see this lower high? So in this area also, you are looking for, you know, you've already marked this zone as your lower low, right? This is your lower high. But what you're actually looking for is going to H1 to actually find what? A breaker to the downside, right? A breaker to the downside. Well, so which is actually what we have here. We have a breaker. The market went back to the test that area. So where's actually going to be your target? This zone here, right? This zone here. So this is actually trading the market structure of higher time frame in line with the lower time frame. So you want to make sure that your lower time frame that you're actually trading is actually in line with the higher time frame bias. And that's actually one of the major reasons why we are looking at this together. Right? I hope we actually find value in what I have discussed with you. Right? So in the next class, I'm actually going to see you because this course is actually going to be progressional and you are going to see the value of what we've actually discussed in the subsequent modules. Right. Thank you very much for listening, and I believe that you actually learn so much more from this concept alone. Thank you. Bless you, and I love you so much.